Hey, my friends, I want to start today with a simple question. What if someone told you, put your money here and you'll get half of it back within the next 12 months? Not over 10 years, not maybe, but cash in your pocket month after month. Sounds incredible, right? And if you've been around markets long enough, you probably had the same reaction I did the first time I saw it. This sounds way too good to be true. Because here's something I've learned after many years working with American investors, retirees, engineers, business owners, people just trying to sleep better at night. Whenever the market offers you something that looks like a gift, it's usually asking for something in return. Today, I want to talk to you about one of those offers, a covered call ETF tied to MicroStrategy, trading under the ticker MST, that's advertising an eye-catching yield close to 50%. And before you think this is another buy or sell video, it's not. This is a thinking video, because the most dangerous investments aren't the ones that lose money quickly. They're the ones that feel safe until one day they don't. You see, a lot of people recently discovered MST because of the income. 50 cents a month, 50% annualized, in a market that feels uncertain, emotional, and frankly exhausting. And I get it. A friend of mine, very smart guy, tech background, told me recently, I don't even care about price appreciation anymore. I just want cash flow. I want something that pays me. That sentence right there, that's the emotional core of why products like this exist. But here's the part I want you to really understand. Income does not exist in a vacuum. Every dollar paid to you comes from somewhere. And if you don't fully understand where it's coming from, you're not investing. You're hoping. MST is built on three moving parts: MicroStrategy stock, covered call options, and leverage. Each one of those can work beautifully on its own, under the right conditions. But when you stack them together, they stop being simple. They become fragile. Let's talk about MicroStrategy for a moment. Today, this is not a software company in the traditional sense. It's a leveraged Bitcoin vehicle. If Bitcoin goes up, great. If Bitcoin goes sideways, pressure builds. If Bitcoin goes down, everything feels heavier. Debt doesn't care about narratives. Interest doesn't wait for sentiment to improve. Now layer covered calls on top of that. Covered calls sound conservative, right? Sell some options, collect premiums, lower risk. But here's the truth most people don't talk about. Covered calls don't protect you from a falling market. They soften the blow, a little, but they don't stop the fall. And when volatility dries up, when prices slide instead of swing, those premiums shrink. So income goes down, while risk stays right where it is. Then comes leverage. Leverage is honest. It magnifies whatever is already happening. When things are going well, it feels like genius. When they aren't, it feels personal. And this is where I see investors get into trouble, especially income investors. They look at the yield, they fall in love with the paycheck, and they forget to ask a very uncomfortable question. What needs to go right for this income to continue? Because for MST to keep paying close to 50%, the math is brutal and simple. It has to earn close to 50%. There's no magic, no free lunch, just arithmetic. If it doesn't, the price drops or the distribution gets cut. Sometimes both. And I've seen this movie before. Not just with crypto, with oil trusts, with mortgage REITs, with exotic income products. Wall Street is very good at packaging. They don't fail loudly, they fade quietly. So today, I'm not here to scare you. I'm here to slow you down. Because the right question isn't, how high is the yield? The real question is, do I truly understand what I own and why I own it? By the end of this video, I want you to have clarity, not excitement, perspective, not pressure. Because in investing, confidence doesn't come from big promises. It comes from understanding the risks before they show up on your screen. Let's talk about what that really means. Now let's slow this down for a moment. Because if you're still watching, it tells me something important. It tells me you're not just chasing yield, you're trying to understand it. And that already puts you ahead of most investors. Let me share something I've seen over and over again in my career. When markets get noisy, inflation headlines, rate cuts, crypto swings, investors don't actually look for returns. They look for relief. Relief from uncertainty, relief from checking their portfolio every morning, relief from feeling like they're always one headline away from a bad decision. That's exactly where high-income ETFs like MST enter the picture. They offer a story that feels comforting. You don't need to guess the market, just collect the income. But here's what I want you to understand, and I say this with a lot of respect for your intelligence. Income strategies are not shortcuts. They are trade-offs. Every time you prioritize income, you are giving up something else, usually growth, flexibility, or resilience. Let's talk about total return, because this is where many investors accidentally lie to themselves. I've had people tell me, very confidently, I don't care if the price goes down, I'm getting paid every month. But here's the uncomfortable truth. If the asset keeps losing value, eventually the income has to answer for it. Think of it like a rental property. If your rent checks look great, but the building is slowly falling apart, one day the rent stops, or the repairs wipe out everything you earned. With MST, we've already seen hints of that tension. The distribution started higher. Then it came down. Not dramatically, but meaningfully. And here's why that matters. A 15 or 20% cut in income doesn't sound scary when we talk about ETFs. But if your employer cut your paycheck by 15%, you'd feel it immediately. Income is emotional. We build our expectations around it. And once investors anchor to a number, 50 cents a month, $6 a year, any reduction feels like betrayal, even if it's logical. Now let's go one layer deeper. Covered calls. I want you to picture this. Covered calls work best when a stock moves, but not too much. Up a little, down a little, sideways with personality. That's when premiums are rich, demand is healthy, and income flows. But when the underlying asset starts trending, especially downward, the math changes. Premiums shrink, opportunities disappear, and suddenly the strategy that looked consistent becomes reactive. This is important because MST isn't writing calls on a boring utility stock. It's writing calls on MicroStrategy, a stock that lives and breathes Bitcoin, and Bitcoin doesn't drift gently. It surges, it collapses, it tests patience. So when Bitcoin cooled off recently, it wasn't just the price that reacted. The entire income engine felt it. And this brings me to leverage. Leverage doesn't create returns, it concentrates outcomes. In good times, it feels brilliant. In flat times, it feels uncomfortable. In bad times, it feels unforgiving. What concerns me, and as someone who's watched this for decades, is that many investors underestimate how leverage behaves emotionally. When prices fall, leverage doesn't just hurt the numbers, it shortens people's time horizons. Suddenly, long-term investors start thinking short-term. Income investors start checking prices, and decisions become reactive instead of intentional. I've seen this play out with mortgage REITs, with energy trusts, with complex income products that promised stability but delivered anxiety. They didn't fail because the strategy was evil. They failed because investors didn't fully understand the conditions required for success. So let me ask you something. Honestly, why are you considering MST? Is it because you've studied MicroStrategy's balance sheet and believe in Bitcoin's long-term trajectory? Or is it because the yield made you pause and hope? There's no judgment here, but there is clarity, because this ETF only works, truly works, if Bitcoin cooperates. If Bitcoin rises meaningfully, everything looks smart. If it stalls, income erodes. If it falls, both price and income get tested. That's not fear, that's structure, and structure always wins in the long run. So as we move forward in this video, I don't want you thinking about whether MST is good or bad. I want you thinking about alignment. Does this strategy align with how you handle volatility? Does it align with your income needs? Does it align with what you believe about Bitcoin, not what you hope? Because the market doesn't reward hope, it rewards understanding. And once you truly understand what you own, you don't panic when prices move. You observe, you decide, you stay in control, and that is real income security. So let me leave you with this. Markets don't reward excitement. They don't care how confident we feel, and they definitely don't care how attractive a yield looks on paper. Markets respond to structure, and the structure behind MST is very clear once you slow down enough to see it. This ETF doesn't generate income out of thin air. It doesn't beat the system. It converts volatility, specifically Bitcoin volatility, into cash flow. When that volatility is there, the income feels generous. When it fades or turns against you, the story changes. That's not a flaw. That's the deal. And every serious investor needs to understand the deal they're signing. I've worked with people who made a lot of money in this market, and I've worked with people who lost money even while collecting income. The difference was never intelligence. It was awareness. The people who did well knew exactly why they owned something. They knew what had to go right. And more importantly, they knew what could go wrong. So here's the real question I want you to sit with tonight. If Bitcoin doesn't go up meaningfully from here, are you still comfortable owning this ETF? If distributions drop another 10, 20, maybe 30%, does your plan still work? If the price falls but the income continues temporarily, will you stay disciplined or emotional? These aren't trick questions. They're investor questions. Because income investing is not about chasing the biggest number. It's about building a system you can live with, emotionally and financially, through good markets and bad ones. There is nothing wrong with high-yield ETFs, and there is nothing wrong with believing in Bitcoin. What gets people into trouble is confusing belief with certainty. Certainty doesn't exist in markets, but preparation does. And preparation starts with understanding. If MST fits your worldview, your risk tolerance, your time horizon, your conviction about Bitcoin, then it may have a place in a diversified portfolio. But if the yield is the only reason you're here, that's worth rethinking. Because the most dangerous sentence in investing is, "It's paying me, so I must be fine." You don't need perfect predictions to succeed. You need clear expectations. You need to know what you own, why you own it, and what you'll do before the market forces your hand. That's how professionals think. That's how long-term investors survive. And that's the mindset I want you to walk away with today. If this video helped you see the market a little more clearly, take a moment to let me know. Not because of the algorithm, but because thoughtful conversations deserve to continue. Until next time, stay curious, stay disciplined, and above all, stay invested with intention.